Welcome to the Decentralized Podcast, where we break down the world of Web3, digital assets, and DAOs with me, your host, Pietri Basson. James Knox, thank you very much for joining us on the podcast. Really looking forward to this conversation. I think, Jim, you've got an interesting background. I mean, you were a New York assistant district attorney. You then went to work at a large law firm in New York and then went into the insurance business.
Correct.
So you've got a really good legal view, but also the insurance side, which I think is really interesting for people in this industry as it matures. So very much looking forward to this conversation.
Yeah, same, Pietri. And first, thank you for having me. Really honored to be here. Also, I work for Aon, which is a very large insurance broker. So the views expressed today are my own views, not Aon's. Just want to put that out there. So thanks for having me.
Definitely. Not financial advice.
No, nor Aon's position on anything, but thank you.
Perfect. I was thinking an interesting place to kick off this conversation, especially given that we're talking digital assets, Bitcoin, etc., is Argentina in 2000 when you traveled over there. Can you maybe tell us that story and what happened?
Yeah, sure. It was exciting times. It was also very sad times. It was kind of like the Dickens novel, Tale of Two Cities. It was just, I landed in Argentina, and it would have been January of 2001. And I went down there for rugby purposes. Argentina was playing Ireland in rugby, but as you know, I'm a big rugby fan. And the day I landed in Buenos Aires, the US dollar was pegged to the local peso 1-to-1. And I had known that before arriving in Argentina, that the economy was struggling. It was reported in the press that they were having some significant issues with the economy, but I was not aware of what I was about to encounter. The day I landed again, the dollar to the peso was pegged 1-to-1. The next morning when I woke up, the Argentine economy collapsed, and there was no longer a fixed rate for the dollar to the peso. So that 1-to-1 exchange rate was off the table. It didn't exist anymore. And the peso was now free floating. And what this meant was that the economy there had collapsed and was getting in really, really bad shape. And the purchasing power of the local people was evaporating before their own eyes. And so much so that within a matter of months, that peso lost 40% of its value, 40. And what happened was there was ensuing riots. I think a day or two after I arrived, 18 people were killed in Buenos Aires in riots. But the sad thing was that I never experienced this before. The fear that you can see on people's faces and talking to faces, the fear across the entire population there was horrible. And I had people tell me that their lifelong pensions were seized by the government. They had no access to their pensions, to live on. And it was a horrible time. And it kind of showed maybe the dangers and pitfalls of a government that's not handling its economy, running its economy well. So that's what happened there.
Yeah. And then how was it actually being on the ground? I mean, your spending power significantly increased very quickly.
Yeah, and I felt really guilty about it because, I benefited from the people's pain. So I recall, Pietri, I went down to a place called Ushuaia, which is one of the most southern point cities in the world. And I was by myself, and I went out for dinner a few nights. I went to the same restaurant in a row, 3 nights in a row, because it was a good restaurant. And the meal, a phenomenal meal, wine and steak and all this food and dessert, it was now costing me about $3 US. And I felt so bad for the local people that I would leave them like a $10 tip on a $3 meal. And the third night I went there for my last meal there, again, the same thing, a $3 bill came, I left a $10 or a $20 tip. And the people in the restaurant, the workers, all grabbed me and hugged me. Which just showed just how desperate the people were there for cash. And that problem that they had didn't exist a week or two prior. But because the local Argentine government handled the economy really poorly, these people are now suffering. And it made an impact on me. But it made an impact on me that I think really affected the rest of my life, meaning that I now have a strong desire for hard assets. I also now have a very strong fear of currency. And what could happen with a currency, frankly, if your government screws up. So that happened.
And I think that's a perfect segue, because I mean that's one of the things that Bitcoin was designed to fix for. When did you come across Bitcoin for the first time, and did it almost click when you saw it for the first time, or how were you introduced to the space?
I found out about Bitcoin and the whole cryptocurrency through various things I was reading, various articles I was reading. But I knew right away that I said, the governments are going to have a hard time embracing this because it's taking away from the government control of that currency, if you will. I saw it as a real viable alternative to fiat currency. And I saw it as a way of people, for instance, South America, how to protect their assets, how to protect value of their currency. But I also suspect at the same time, I said, this is probably not going to go over very well with some governments who really are not ready to relinquish control over their currency. But, that happened about maybe 8-10 years ago.
Okay. And then when did you buy your first Bitcoin?
It would have been about 6 years ago when there was a bit of a crypto winter, if you will. But I'm a buy and hold guy. So I'm in it for the long term. So what I do have, I just put aside, and I'm in it for the long term. Yep.
No, I definitely agree. I think the hard assets, especially after you've seen something like that, that's why I think it brought it home for you. I mean, I was living in South Africa next to Zimbabwe as Zimbabwe was crashing as well.
Right.
And, $1 trillion notes, all those kinds of things. So
right.
I think for some people, it's much more real. You've seen it. You've seen the impact it had on people. I've spoken to friends from Zimbabwe where they were paid in hard assets like meal and stuff like that because the currency didn't have value.
Right. Well, I think it was 2008. We had our banking crisis. And it was obviously it wasn't to the extent of what happened in Argentina. But I recall a lot of people laid off jobs. I recall commuting to New York City. I live about 2 hours north of New York City, north of it. And I was taking the train every day. And 2008, after the banking crisis, a lot of people lost their jobs. I remember taking that train to New York City, and that train in the morning, which was fully packed every day, now at half the occupancy. Half the people on that train because they lost their jobs. And when you see things like that, when you experience what happened to me in Argentina, you become a firm believer in either hard assets or alternative assets. I'm also a father. I have 5 children. And right after the banking crisis, I became very fearful of how am I going to support my family? Not if I just lose my job, but if we have massive runaway inflation or if somehow the economy collapses and, how am I going to provide for these 5-6 mouths? And that hit me hard. So, that also reinforced me a very, very strong belief in hard assets, alternative currencies, and Bitcoin.
So you almost alluded to governments not liking Bitcoin and alternative currencies. I was planning to get into this later on, but this is a perfect time to get into it. I mean, central bank digital currencies are a big topic at the moment. Lots of experiments going on out there. Different people have different views. What do you think about central bank digital currencies? And do you think they'll actually be a success and can they work?
It's a great question, Pietri. And my fear is that it's going to work because it's going to be forced upon us. And here's what I mean. The Federal Reserve in the United States has already completed a CBDC program with MIT. Okay. In association with MIT, the Federal Reserve has already developed a CBDC ready for implementation. What's interesting and very telling to me is the following. If you go on their website of the Federal Reserve, the website on the Federal Reserve, they actually have one dedicated to CBDCs. And on it, it lists risk factors for CBDCs. And I went to the website a few months ago and looked at all the alleged risk factors. And what really struck me was the fact that the strongest fear I have, the strongest risk factor I have for a CBDC was not listed by the Federal Reserve. What is it? Privacy. It wasn't listed on the Federal Reserve's website. And I said, why? If I'm on a CBDC, that means that the government now watches every single transaction I've conducted. And if you look at what happened, take a step back and look what happened in Canada last year, maybe prior to last year, with the truckers. Whether you agree or not with what the truckers were doing, whether it was peaceful or not, right? Everyone has different opinions. Well, what did the government do? What the government did in Canada, these alleged peaceful protesters, truckers, was it seized their bank accounts. And as a way to enforce action, enforce behavior on these truckers, it seized their bank accounts so that they now had no access to their funds. So let's take a step back and bring it back to a CBDC. Well, let's say in Cayman, let's say in Canada, US, UK, wherever, China, let's say whether we like it or not, we're forced to use CBDC. Well, let's say we have a social score initiated by the government. And the government wakes up one day and they say, oh, Mr. Knox, you bought too much alcohol. This is not good. You bought too much tobacco. This is not good. We're now going to restrict or limit the amount of CBDC that you can use. It's not good. And I always say to myself, if there's new technology coming down the road that's being made available to us, If that technology comes at a cost of either freedom or privacy, you have to ask yourself, is this technology worth implementing and using if it's coming at a cost of my freedom and privacy? Until somebody can tell me 100%, undoubtedly, without a doubt, that a CBDC will 100% protect my privacy rights, until that day happens, I personally am very suspect of a CBDC.
No, it's very interesting. I think, especially in the last few weeks, you've seen people are terming it sort of the last frontier is privacy, with some of the legislation being passed around encryption, availability, getting into data. That would be your financial privacy. So
100%.
it's an interesting line that's being drawn, and I think we're going to see battle lines around this almost. I think digital assets, there's a lot of good solutions for that, but how governments react is going to be interesting to see as well.
There's a lot of great uses for digital assets. One is cross-border payments they talk about. Another is store of value, right? There are a lot of great uses for digital assets, but like any technology, if it's being used improperly or if it's coming at a cost of our freedom or privacy, you have to question, is it worth using that technology? And listen, digital assets on their own, there's nothing wrong with them. On its own, it's not violating my privacy. It's not violating my freedom. It's when those who control those digital assets or implementation of digital assets, when they start setting rules and standards that affect my privacy and freedom, that's when I start to question, the viability or the use of that technology.
No, very interesting. I think let's move it on to a not so serious subject. So I think you mentioned earlier that you were driving or taking the train into New York on a daily basis. You saw the people in there, etc. I know these days you're working mostly remotely.
Correct.
How have you seen that change? Because you sort of come from a generation that was very used to being in the office, spending time in the office, and we've now evolved to hybrid or fully remote. How have you adopted to that, and how has working fully remote sort of impacted you, had changes in your life?
Yeah, it's a great question. I'm old school, Pietri. I've been around for a while, and I'm a strong believer in having people in the office. I think that people inherently, especially the younger generation, if someone's starting in a company and they're learning the position, learning the job, learning their duties, they have to be in the office. It's very hard for a young person who's just starting out in a career and an industry to learn remotely. So when it comes to younger people joining a company and engaging in a new industry for them, I'm a very strong advocate of being in the office. When it comes to actually managing people, it can be done remotely. I think, there are some people that are more productive if they're managed in person in an office, right? But I think a lot of people can be managed, through remote working. Me personally, I was commuting over 5 hours a day. I lived over 2 hours from my job down in Manhattan. I have 5 children. So when you're feeding 5 mouths, you do what you have to do, which means in my case, commuting over 5 hours a day. I can tell you from a personal perspective that since I've been working remotely now, I've become extremely much more productive. And for me, there's no going back. And the expense involved, the time, the wear and tear of sitting on a train. Can you do some work on a train remotely? You can, but the communication goes in and out, the connection goes in and out on a train. It's not ideal. So for me personally, there's no going back. And part of, I think, the whole COVID experience was it kind of forced people to work remotely. That was part of it. There's some people out there who think that maybe there was a plan behind that. Who knows? I won't get into that today. But for me personally, I've benefited from working home remotely.
No, I think the time is the big thing. I've seen it in my life as well. I remember when I first moved to Cayman and I used to do 3 hours traffic every day, and you come back and you get home in the evenings, and you're like, oh, I've got time. What do I do with this?
Right. Exactly.
That time is really invaluable.
Yeah.
And I mean, you can use it to do productive stuff. And
yeah.
It's very interesting.
But I think you have to be careful how you manage it. When I first started working remotely, when COVID happened, I found myself in front of a laptop or computer working literally 12 hours a day, nonstop. And it took a toll on me. And I remember, saying to my wife, I was like, I don't feel good. And I had to take a step back and manage it better, meaning take breaks. I was working in my basement with no natural light, and that was not healthy. So I moved upstairs. So working remotely is fine. You've got to be professional. You have to be responsible and mature and manage it in a way that it works for everybody.
No, that risk of always just working is definitely there. I've seen it myself, and you have to make time for exercise, make time for family.
Exactly.
It's really easy to just sit there and work. They're
Exactly.
right upstairs or in the room next door, and you don't see them at all. So that's really.
I will say, I think one thing about my company that I work for, Aon, they're fantastic promoting wellness and making sure that you manage, whether it's remotely or in the office, make sure that you manage your time well so that it works out well for everybody. You know, the company, our well-being for everybody. So Aon's fantastic at that.
No, I mean, that always gets us into the next one is, I think you've been one of the people I've seen that's the best at business development and marketing. You've spent time in Cayman, but you travel quite a lot. You know a lot of people, you connect people. You're really very experienced and you do it really well. What are some sort of business development tips that you could give people? How do you look at business development marketing? Because, I mean, you're almost a master. I'd like to get some of the peek behind the curtain.
Well, thank you for the kind words. First thing is you have to love what you do. I love what I do. I'm a people person. I love interacting with people. I'm a type of person that always assumes the best from people. If I'm dealing with someone across the table, I'm assuming you're a good person. My attitude is prove me wrong. But up until that point, I'm assuming you're a good person. I just generally like people. That's my thing. To be effective, Pietri, it's a great question. You have to be a marketing machine, meaning the following, meaning that you have to go out and meet people, right? You have to go out there and promote yourself. You have to identify, who is your potential target and who's a potential prospect for you to do business with. One thing that a lot of people who join sales initially in their career, when they join the sales position, is they make a massive mistake. And what they do is they make sales, if you will, about them. Sales has nothing to do with me. It's about you. It's of the person that you're trying to engage in business with. You have to determine what is that person's needs. Does that person have a need for my service? If they do, let's talk about it. Are there some pains they're experiencing? Are there some needs that I can help them with? If there's not, then move on, right? But the big fault a lot of people do with sales is they make it about themselves. I was actually asked by my company to give a sales class about a month ago. I spoke to about maybe 30 newish and some senior producers, right? And I put up 2 emails on the board. I said, one email here led to a multi-million-dollar career. The other did not. And very, very succinctly, I'll break it down. One email literally said, "Hi, I'm Joe Smith. I'm doing this. I'm going to Lisbon next month. My company's doing this. We're doing this." He mentioned the word "I" 5 times in the email. I said, that's one example of an email. I said, another example is, person wrote an email, said, "Hello, this is who I am." The only time they mention themselves. Your company's engaged in custody for digital assets. We're aware that you're probably on a constant basis, people are trying to hack in or steal your digital assets, your assets under custody. We do have solutions for you that can help you with this potential exposure or problem you may have. And I said to the group, I said, which email do you think led to a multi-million-dollar career? Most identified the one that did not mention the salesperson at all. So the point I'm getting at is that a lot of people, when they get into marketing, they get into sales, has nothing to do with me. It's all about the prospect. And can I help them? Is there a problem that I can solve for them? If it's not, move on. But to be really effective, to be a marketing machine, like I said, Petri. So what it means is that you have to do everything. You have to get out there. You have to meet people. You have to cold call. You have to network. You have to sponsor different groups. You have to get people together, network, and bring people together. So, and you have to like it. It's a lot of work, a lot of effort. But if you have the right personality for it, which, please God, I think I do, it's fun. And you meet some great people like yourself. I'm blessed that I've met some phenomenal people across the world in this digital asset industry. So some great people. I remember when I first joined this industry 10 years ago. I can't say that. There were a lot of great people. There's some crypto cowboys out there. And I think the industry has matured since then and has developed to a point where now we're seeing a lot of really great quality people in this industry. And that's heartening. It's good to see.
Well, definitely, I'd say the maturing in the industry is very good to see. I think the one thing, and this is maybe a little, just for myself almost, you travel a lot. You're probably on a plane a lot of times during the year. What are some travel tips that you can give folks in terms of when you're always back? What are you looking out for just to sort of improve your traveling?
Sure. One tip that I would give men and women out there is that I found this extremely useful, is if you're going to go on a business trip and you're packing suits, What works for me is the following, and I found this out. I think I read it maybe somewhere 20 years ago. When I pick up my suits, I have my suits dry cleaned. When I pick them up the dry cleaner, they're wrapped in plastic like a cellophane. If you take that suit, you lay it on the bed in the plastic cellophane, and you fold it up, maybe 3 or 4 folds, that suit, and put it in a suitcase. When you take that suitcase out, when you arrive at your destination, you unfold that suit, not a wrinkle in it. Just something that works for me, and it doesn't cost anything, but that works for me. Travel tips: be extremely prepared. I always arrive early at my flights. Do some work at the airport before I arrive. Drink a lot of water before I get on planes. I don't sleep on planes. I could never do it, which is fine. So back in the day when I was a bit younger and I could had more stamina, I could do a red-eye flight. I could fly from New York to London, arrive at London at 6 a.m, check in the hotel, dump my gear and go to a meeting. Right? I can no longer do that. It doesn't work for me anymore. So I try to arrive, maybe late at night, maybe 7, 8 o'clock in London or wherever I'm going destination. Try to get a good night's sleep. But my days of red eyes are over. I cannot do it. So I think traveling is just be prepared. Just be prepared.
Yeah. No, just planning it out, where you're staying, all those kinds of things.
Yeah, and I'm a budget traveler, so I always look for value when I travel, whether it's hotels, whether it's transportation. I'm always looking for value, and I think that's key, especially in this economy today. You have to look for value.
Awesome. Well, I mean, we can probably get into the serious stuff now, especially given your background as a district attorney. We've seen the SEC do a few cases in the last while. I think UkiDAO is probably one of the ones that's really well known. We've seen some, comments and things come out there. Can you maybe speak around UkiDAO, what you've seen there, and what some of the potential implications are of the UkiDAO case?
Yeah. You have UkiDAO, you have LIDAO DAO, you have other DAOs that have been the subject of regulatory enforcement in the U.S. I'll just start the conversation by saying this. As you noted, I was a former district attorney, assistant district attorney, prosecutor in New York City. I am very pro-enforcement, okay? Law and order. My dad was a New York City policeman. I was a district attorney. My background is law and order. So I'm very pro-regulation and enforcement. The biggest issue we have now, before I get into UkiDAO and LIDAO, the biggest issue we have in the States is that we do not have what I call our MiCA moment, okay? In Europe, they passed legislation, which is going to be enacted, part of it's going to be enacted very, very soon, or will be implemented soon. Later on in the year, it's going to be full force in effect. The MiCA digital asset laws in Europe. The benefit of having that is it gives companies who are operating in that space in Europe, operating in the digital asset space in the industry, it gives them guidelines and guardrails which to operate. Okay, we completely, for the most part, lack that in the United States. And what happens then as a result is because our legislation, for the most part, has not promulgated rules and guidelines and regulations in which the digital asset industry can operate, we're now relying on very, very old case law, right? And you have the Howey test, which determines what a securities is, what's considered security in the United States. I don't know, it's 60, 80 years old, very, very, very old law. Common sense tells you that when the Howey test, Supreme Court of the United States, enacted that or made that decision 80 years ago, whatever it was, they had no concept of a digital asset. How could they? But the problem we're having now is that we're being forced to have an industry be judged or follow the guidelines of an 80-year-old court decision. It doesn't make sense. We will not have a very thriving, I think, digital asset industry. It will not reach its full potential, I personally feel, until the legislation in the U.S. steps up, Congress or the Senate enact a MiCA-like guidelines and laws that will help us in the industry conduct ourselves, okay? So let's take a step back. So go back to the original question about UkiDAO. So what you have in the States is that you have the CFTC and the SEC regulators. The regulators are going to regulate. It's their job. I don't blame them for regulating. I don't at all. I encourage it. I've testified before the CFTC on digital assets in the insurance industry. I did that several years ago. What you have in the States is that the state of California has their own interpretation. They've approached DAOs in a very specific way. And not surprising, because of the way that California has dealt with DAOs, a lot of litigation against DAOs happens to be in the Northern Circuit of California, which is the San Francisco area. And what California has done, the case law or the law in California is that if you get, it's very, they look at general partnership theory. What they said in California is that if 2 or more people come together for the purpose of making a profit, it's going to be considered by de facto, a general partnership by law. So what's a DAO? Well, DAO is you get a community coming together, and they form an association, presumably or potentially for the purpose of making a profit. So California said, okay, DAO, you are now a general partnership. So in a general partnership, all the members of that partnership, including all token members of a DAO, are now jointly and severally responsible for any losses. That has severe economic consequences for a DAO in the United States, or one being litigated in California, one that was never intended. I guarantee you most token holders of a DAO, when they bought that DAO, did not realize, wow, I can now be personally liable for losses of this DAO. But that's where we are today. So the CFTC, the SEC, has gone after UkiDAO, Lido DAO, other DAOs for various reasons. But the impact is that these token holders now can be jointly severally liable for their loss of that DAO.
I think Lido DAO was an interesting one because in the Lido case, they specifically named some of the VCs that invested in it as well. Do you think that's going to have any impact for sort of considerations for a VC when they're looking at projects?
It has to. It's a great question. It has to. And I was shocked because I'm a lawyer, right? Former practicing lawyer, and I've been following the DAO litigation. But when I saw the Lido DAO and I saw the VCs that named in that, like that really jumped out at me. You had some heavyweight VCs. You had Dragonfly, Andreessen, and some others heavyweights. And I took a step back and I said, if you look at what happened to FTX, look at some of the VCs that invested in FTX. I'm not going to say names, but some lost $400 million and more. You would think that the VCs would take a very hard look in the U.S. when, looking at some investments and how they get involved with some of these investments. I guarantee you, I can't speak on behalf of these VCs, but I guarantee you in the Lido DAO, those that were named, the VCs, they never in a million years thought that they're going to be named in an enforcement action, right, with the CFTC or the SEC, but now they are. So it has to have an impact, you would think, on these VCs going forward. Between FTX and Lido, you would think that these VCs now are going to take a very hard look at their investments in this space, which is kind of a shame. I personally feel it's a shame because it's a growing industry. It's a great industry. It's a thriving industry. We need capital. We need capital to scale. Some of these companies have a great business model. But if you're going to put chill and fear into these VCs because of these actions, because of what happened with FTX, because of what happened with Lido, it's not going to help grow the industry, which we all want to see the industry thrive. So yeah, I think that's a negative impact.
No, definitely. I think so the positive spin on it almost is there are really good risk management factors out there. Insurance is definitely one of the ways to manage risk. If we almost take it back to first principles, I mean, you've been in the insurance industry for ages. So for folks who don't know, how the sausage is made, how insurance really works, how does insurance really work behind the scenes, reinsurers, the whole process?
Yeah, it's a great question. Let's use a Cayman Foundation as an example. You always have to think about insurance. Insurance is risk transfer. Is there an exposure risk that I have that I'm not comfortable with? Now, if I'm not comfortable with it, it's keeping me up at night. All right. What do I do with this risk? How do I transfer it away from me? It's through insurance. All right. So what happens is, Pietri, is that there are insurance companies out there who are willing to take a look at a risk. They're going to underwrite the risk. They're going to take a hard look at it, conduct their due diligence on this risk. Presumably, hopefully, they understand the risk. And then they will say to themselves, you know what? Okay, I get it. I understand this risk. I'm comfortable transferring this risk from this Cayman Foundation, this board of directors. I'm comfortable transferring the risk from them to me without a price. And they're going to set that price. And they're going to offer terms to the Cayman Foundation board of the directors. And hopefully they come to an agreement. And then that transfer of that exposure, that risk occurs from the Cayman Foundation board to insurance company. Now, the good news is that when I first came to Cayman 2-3 years ago, there were little to no insurance companies willing to underwrite a director sitting on a Cayman Foundation board. The great news is now there are companies willing to do that. Insurance companies willing to underwrite and transfer the risk for a board of directors or a director in Cayman to an insurance company, and which is great. And we're seeing more companies do it, which is good because competition is good. And the pricing of these policies is going down, which is great for everybody. So it's becoming more of an industry here that really wasn't too much existent a few years ago, the insurance industry for directors. It's now here, it's growing. And me personally, I think it's going in the right direction. We're seeing a lot of competition companies enter the space, which is good for everybody.
No, definitely agreed. I think it's great to see the industry mature. In the last 3 years, it's been massive, even before that, where we came from. Can you remember the first insurance contract that you issued for a digital asset company? And how hard was it to actually get that done?
So it's a great question. I'm not going to say who it was. It's a household name in the digital asset industry. But very, very simply, what I did was I sent a cold call email to this very, very big, well-known digital asset company. I said, we have a unique insurance solution for you. Given the nature of your operations, what you're doing, I'd love to talk to you about it. And to my shock and horror, they responded and said, hey, come on in, let's talk. And that was 8-9 years ago. And we did provide some solutions for them, insurance solutions for this company. And because the company is well known, once people found out that I helped that very large digital asset company with their insurance, it opened doors for me. And then, if you will, kind of gave me credibility. And people say, hey, can you talk to us about insurance? Because we have these exposures and risks that we're not comfortable with. Can you help us with it? And I said, of course, yes. And it really took off from there. So that was my first crypto experience with insurance about 8-9 years ago.
And I'm sure it was, getting reinsurers, everyone else comfortable with issuing insurance for any digital asset company was tricky. What do you think would make it easier to get insurance? The industry's matured. I think we've seen good legal structures. There are some security standards, things like that coming out. What do you think the industry almost needs to do to make it easier to manage risk?
Well, that's a great question. Again, let's go back to Cayman again, right? Let's look at a lot of the Cayman foundations that are being set up here. Let's look at it from that perspective. There's very little risk, but the reason why, all right? For the very, very great amount of directors here and foundations that I'm personally either working with or I see, it's all about quality. Quality directors are being put on these boards. The people here that are offering their services as directors are extremely high quality people, right? People that I'm proud to be associated with. Very intelligent, very bright people, great background. So that right there is very good for the insurance industry because we're talking about quality people who know what they're doing here in Cayman, sitting on these boards. I think the second thing is the regulation here, the regulators. I think there seems to be a really, really great working relationship with the Cayman people here on island working digital asset industry and SEMA. The dynamic seems to be very favorable for the people here in Cayman, which is good for the insurers. Right? We haven't seen, to my mind, I don't believe we had enforcement action on island here against a digital asset company, right? And why? Because I think there's a good, synergy between the companies operating here and SEMA. They're somewhat in lockstep with what they're both doing, and how they both view the industry. So when you see things like that, quality directors on island, regulators that frankly here embrace the space and embrace the space and treating the people well here, that translates to low risk, low exposure insurance companies, and that enables them to give good terms to people here on the island in the industry.
Mm-hmm. Yeah. And then in terms of the types of insurance, you've mentioned directors insurance, we've got officers. Have you seen, I know we've had a conversation around a council, for example, people who are, helping to make decisions as part of a DAO structure. Can you get insurance down to those levels as well?
You can. That's a great question, Pietri. And that's evolving as we speak. That's kind of like the really interesting dynamic about what's happening here in Cayman and the insurance industry, right? Because a DAO is not a legal entity. It's not. And, the one beauty of, say, what they did in Wyoming was, Wyoming said, we're going to create legislation which is going to legalize a DAO. That's great for Wyoming. The problem is that when you have the CFTC and the SEC doing enforcement actions against these DAOs in the States, my personal opinion is the DAO industry in the States will never progress. It will never grow. And I put up an article on LinkedIn about a month or two ago. I said, hey, that's great what happened in Wyoming, but as long as these enforcement actions still going against these U.S.-based DAOs, Cayman's the jurisdiction of choice. So I think that's where Cayman is really going to benefit from what's happening in the U.S. Until the U.S., again, adopts MiCA laws, these guidelines that help DAOs and help companies in the States, Cayman's just going to thrive. Getting back to the situation with DAOs, and DAOs insurance, we have helped DAOs in the States who had not just the board of directors, but they had the founders, they had committee members. They said, we want to be protected by insurance also. It took a while to figure it out because the DAO itself is not a legal entity. So it cannot give indemnity to these people, these founders, these committee members, because there's no legal entity to give indemnity. So what we did was, with one of our clients, is we had the DAO's foundation agree to give indemnity to the founders and to the committee members of the DAO. So once indemnity was in place, then the insurance company said, okay, fine. There's indemnity in place. We will now insure you. Right? The whole purpose, a lot of the purpose of insurance is they look for, particularly for D&O insurance, they look for indemnity to be the first backstop, not D&O insurance. If there's a director officer claim, a claim against director and officer, the insurance company wants to see that there's indemnity between the board and the company that they're sitting for, representing, right? So once there's indemnity in place, then the insurance companies, for the most part, will agree to give directors' office insurance to these directors. And the issue with the DAO is that because there's no indemnity in place, the insurance company's not willing to step up and insure the founders, insure these community members. But once we had indemnity between the foundation and these members, then we have to get insurance for it. Okay. It took a while, but we got there and we did that.
Yeah, and that's where the foundation company is very useful. So
correct.
It's that real world touch point where you can actually get insurance. You can start creating that indemnity link, correct, and then get the backstop insurance.
Because it's a legal entity.
Yeah,
exactly.
Awesome. What do you see as the future of insurance? Do you see sort of the policies evolving, covering token holders, anything like that?
Yeah, great question. Aon just formed in cooperation with Names, NAYMS, and another company. We are now putting policies on blockchain. We are now going to enable payment of these companies to be done on blockchain. We're going to enable claims to be assessed and dealt with on blockchain. So to your question, it's a great question, right? Pietri, the industry is evolving. You have to evolve with the economy and with where things are going. To be a successful insurance company broker, you have to be a leader. And what to Aon's credit, what they're doing is they're leading this space now, and they are helping companies put payments process or put the payments for these policies on chain, put the policies on chain. This way, all parties involved have access to it, and they can see what's happening, in real time with the whole process of insurance. So that's where things are heading.
That's very exciting.
It is. It took a while to get there, but Aon has been leaders in the space, and we're now implementing that.
Okay. And then policies backed by digital assets as well?
Correct. Okay. In digital asset denominations.
Yes.
Exactly.
Okay. That helps a lot. I think especially, I remember looking at custodian policies where you've got X million dollars of cover, but you're insuring Bitcoin. And Bitcoin's price tends to,
exactly.
So your X million dollars might not really cover your risk very quickly.
Exactly. Yeah. So now the policy, which will be that, let's say Bitcoin, let's say that the policy denomination in Bitcoin, it'll be parallel with the limits that are in Bitcoin. Mm-hmm. So it'll always be in lockstep.
Yeah. Exactly. Okay. Wow, that's really good involvement. Developments.
Yes.
I think you've mentioned Cayman a few times, but you travel to a lot of other jurisdictions, Bermuda, BVI, UK, US, very well. What do you think makes Cayman different compared to some of the other jurisdictions that you've been to?
Yeah, great question. A number of factors. And one of it, again, goes back to quality. I'm not saying that the other jurisdictions that you mentioned do not have quality people, but there seems to be a very, very heavy concentration here of very highly educated, experienced people in the digital asset industry that are moving it forward. I know, for instance, and like this applies to you. There's a big movement in Cayman for South African people in the finance industry, and I've never been there. It's on my bucket list one day, but everything I've been told that the education system in South Africa is fine, high quality, and you can see that in the people who come over here and interact with. And I think that's a big reason why Cayman is doing very well in this industry, is because of quality people here. Again, just going back to what we said before about your regulator, SEMA. They've embraced the space. You have the foundation company law here, which enables these DAOs to set up foundations here. And it's just clear to me that you have the regulators here who've embraced the space. I won't say names, but our company has set up captives for very, very, very well-known large exchanges and crypto exchanges in the U.S. And that was done here years ago. And, the regulators here embrace that. So, it comes out of quality. comes down to very well received and regulators who embrace the space here. Those are things that help this industry, I think, thrive here and scale.
Right. I've heard it from clients as well, where the service providers, I think, make a big difference. We're used to sort of being that funds industry leading financial sector. And I've had clients say that a call with a Cayman lawyer, you start with the business. It's not blockchain 101 in the beginning, explaining the project.
Exactly.
So I think that makes a huge difference.
Exactly.
To wrap up a little bit, I normally ask, what are you excited about in the industry at the moment?
It's a great question. I'm excited about things. I'm concerned about things. I'm excited about the way the industry is scaling. I've said this for years. Bitcoin's a rising tide. So if anyone who's been in the industry for a length of time, whether, for me, it's 8 to 10 years, you've seen the crypto winters. And I remember, Pietri, years ago when Bitcoin went from 20, I think, down to 4. When I was at 20 back, maybe this was, 6, 8 years ago, it was a very thriving industry. You were seeing a lot of companies come forward. This was after the ICO phase, right? But when the industry started to mature and you started to see more thoughtful people enter the industry and try to promote the industry and scale it and grow it and really reach its full potential. So when Bitcoin went from 20 to 4, the industry slowed down. Everything slowed down. Everything stopped. Then as Bitcoin started rising up again, and then you start to see more activity. You start to see more people enter the space. But I think to everyone's, not surprise, but everyone's appreciation, you saw the institutions start getting in when Bitcoin started hitting some really serious values. And that's what we were all waiting for, because that, to me, led credibility to the space. Now you have, I won't say names, but you have some very, very heavy hitters in the space, the banks getting involved, and really are the wins, I think, now behind Bitcoin and the industry in general. So I'm excited about that. I'm excited about the potential of blockchain. It's a phenomenal technology. You think about it. Those are things I'm excited about. I have grave concerns again back to a CBDC, things like that, where as this technology thrives and scales, is going to come at a cost of our freedom and our privacy. That terrifies me. Like I said, I have 5 children. I do not want my children waking up one day and every single thing they've done with their life is being examined by a government or Big Brother, somebody up in the sky. It terrifies me terribly, especially because I have a family and I don't want my children inheriting that. So those are things that excite me. Those are things that concern me. And but it's fun to be in this industry. Again, meeting great people like you, phenomenal people on this island. It makes it fun to keep coming back here and working with people and trying to help them.
Yeah. No, I think you've nailed it on the interesting. I mean, it's never boring in this industry.
No.
You've done a few different careers, etc. I'm sure now there's always a new challenge and something new to figure out, and that's what keeps it interesting. It makes it fun.
Never a boring day.
No, definitely not.
Yeah.
And I think it's especially given where the market is. There's more interesting things coming around, and you're always dealing with new founders who have new ideas and new things that they're doing.
Correct.
So you're on that cutting edge of innovation, which is always fun.
Yeah. I'll just leave at this is that I hope one day in the United States, we do have legislation that acts as a guideline and a guardrail for people operating in the digital asset space, and gives them a clear path forward.
Yeah.
Until that day happens, Cayman will continue to thrive.
Well, that's probably a good note to end off on. Jim, where can people reach you if people are interested in Ion insurance? What's the best way to get a hold of you?
Yeah, thank you, Petri. James.Knox at aon.com. I'm on LinkedIn, so people can find me.
Brilliant. Well, thank you very much for joining us.
Thanks for having me, Petri. A lot of fun. Thank you.
Awesome. Thanks. There we go. That was a nice one. Thank you for listening to the Decentralized Podcast. I hope you enjoyed this episode and would really appreciate if you could like and share if you got any value from this episode. Please also make sure you follow us on YouTube or wherever you're listening to your podcast to make sure you don't miss the following episodes. If you want to connect with me, you can connect with me on LinkedIn or Twitter. We've got the links down in the description. And I'd also like to thank our partner for this episode, Hash Directors. Hash provides independent directors to Cayman Islands-based digital asset funds, foundations, as well as BVI entities. And the team over at Hash are really experienced. They can make sure that you consider all of the different things that you need to look at when setting up a company. They really know their governance as well as regulatory compliance. If you want to learn more about Hash Directors, there's a link down in the description. I'll see you on the next episode.